When you understand that you do not need to accept bigger risk on the initial part of a trade, everything becomes easier. Hey, it's Pete, and welcome back. If you're swing trading stocks while you have a full-time job, you're probably asking yourself right now, is everybody else capturing these massive gains but me right now? There's a lot of volatility right now, and the stock market is offering so much opportunity, but you need to be structured. And that's actually one of the biggest things. When I first started trading 30 years ago, April 17th of 2000, as a matter of fact, the biggest thing that I always wanted, just give me a system. If you give me a system, I can follow it. I swear I'll follow it, and then everything will change. Today, in this video, I'm going to give you a system for swing trading stocks, and especially one that you can follow if you have a full-time job. I'm going to start out with the end first, where I'm actually going to show you where we're going with this, and this is actually where we're headed. So when we're looking at swing trading stocks, there's a big part of the business, a big part of the process, I should say, that is, let's call it subjective, where you're not sure exactly what to do next. And I want to be super clear about this, that once you have a way of looking at the stock market, especially again from a swing trading perspective, everything changes. And I want to give you a quote right now that is a big part of our community, which is, when you know what you're looking for, you're never lost. And I think that's probably one of the biggest problems that people have that are working a full-time job, that are just not seeing the consistency and, dare I say, the predictability of their stock trading, again, especially their swing trading, while they're running or working a full-time job. Now, I want to give you another quote here, and this is really important. The consistency that you are looking for in your swing trading comes from the consistency with which you follow your plan. Now, there's two really big parts of the plan. Number one is defining an edge, right? The edge is exactly, here's what I'm looking for. And then you simply go out to the market and you're saying, is what I'm looking for there? Now, if you found yourself frustrated, overwhelmed, maybe an emotional mess sometimes with the market, it simply means that you don't have a clear enough roadmap of the stock market that tells you exactly what you're looking for. And I'm going to walk you through from start to finish with all of that today. We're actually going to break down, I'll give you a sneak peek of this right now. We're going to talk about this, what I call the power pyramid. Now, the power pyramid is something that is a structure for finding ideas in what's known as, some people call it a top-down analysis, but I want to give you a little bit of a different framework. And essentially, a top-down analysis means that we're looking for reasons to accept risk. That's the big thing I want to talk about right now, because when you are about to put your hard-earned capital into a new swing trade, you're essentially saying, I'm going to put my money in harm's way. How many reasons can I find that I really love this idea? The higher up you go towards it's perfect, we're good. We're going to allocate some capital to it. And we're going to walk through exactly how to allocate that capital. And then we're going to actually say, what is our plan for after we put that trade on? Now, I think we can all agree, most people, when they're swing trading stocks, you're looking at the market, you're pulling up your charts, and you're basically saying, okay, tell me where to get in, right? So we're looking at the stock market. It is flying to the upside, and everybody wants to get involved, right? How do you not love what's going on here? You can see a chart of the S&P 500. The problem that most people have is, after they put on a swing trade, what do you do? And that's actually what we're going to cover right now. So I want to break this down, and I want to walk you through what we have here, which is trade management optimization. So the part that everybody loves is this part right over here, the entry, right? Everybody understands, just tell me where to get in. Just tell me where to get in. That's all everybody wants, right? Let's kind of work our way out away from that for now and walk our way through the process. Because again, right now we're talking about the mindset part of things. And I want to really walk through something that I think is really, really important, which is the thought process of actually what it means to be managing your own capital. So if you're managing your own capital, congratulations, you hired yourself as a money manager. Are you qualified? That's what we're going to help you walk through right now. But up here, the mindset part of swing trading stocks is the most important. And again, I love giving quotes. I love giving posted pad type stuff. Here's the thing. Most people put on trades never expecting the situation to move against them. And if and when it does, even if they have a plan, they don't act on the plan, because most people are trading to be right. Because I watched a YouTube video on stock trading. I read a book about stock trading, and it says right there on page 53, if I do this and that happens, it's going to go up. I got news for you. Even the best edge on the planet has trading losses. And I'm going to flat out tell you right now, my win percentage on my swing trades is actually less than 50%. But we are up a massive amount in that swing trading portfolio simply because of the number one thing that everybody needs to learn right out of the gate, which is accepting losses. Now, the accepting losses part of it is if the trade moves against you. So let's actually hop into that again, right? So we have putting the trade on as part number one. And when we put the trade on, immediately as soon as we get filled, we have to put on a stop loss. Now, the most challenging part of trading that is, I want to say fascinating, is what happens when we're kind of stuck between whether or not the trade works out or it doesn't stop us out. Now, what I mean by that is if you've ever experienced where you put on a swing trade, it kind of moves in your favor, moves against you, moves in your favor, moves against you, and your heart's kind of like pounding out of your chest. That's simply because you're likely not setting up enough trades that have a high statistical probability of moving in your favor. And that is really a fancy way of saying you haven't stacked the odds in your favor by doing what we just showed you, which is looking at the power pyramid. And I'm going to walk you through it. So please be patient. Watch this entire video. I'm going to give you all the steps from start to finish. So if you're finding when you put on a trade, you're kind of dancing between the entry and the stop loss, which, by the way, it's just good trading to put that stop loss in as soon as you get filled. That simply means that we need to do a little bit of a better job of finding ideas like this. Now, before we even get into the idea, there's something up here that we have to focus on. Again, swing trading, you have all these other responsibilities. The stock market's kind of on the side, right? I want you to think about this. Every single one of us thinks that we're always putting on perfect trades and you can't figure out what the heck is going on. So what we end up having, I'm going to pull this up and please, I strongly encourage you to take screenshots of this, is actually what we think we're doing. We think that when we're putting on a trade, we're putting on a perfect trade and nothing is wrong, all those kinds of things, right? And even in the best case scenario, I want to be clear about this. Even in the best case scenario, there's going to be some trades that work out, some trades that don't work out. But if you do what you're supposed to do over, let's say, 10 trades, you're actually letting the edge do the heavy lifting for you. And that's what we're going to talk about right now, how to work that edge and build that argument for a good swing trade. So if you missed the point that I just went across there, I want to make sure it's super, super clear. Even the best edge will have losing trades. I want you to get comfortable with that. Now, here's the quote that I want to give you, okay? A trading loss is a business expense. Now, the sooner you bring that in and it becomes a core part of your swing trading, trades that don't work out could still be good trades that just didn't follow through. So after you exit a swing trade, profitable or not, you have to ask yourself, would I take that trade again? And now you're building that muscle of identifying good ideas. Hey, it's Pete. Thank you so much for watching this video. If you're finding it valuable, there's actually two ways you can take the next step, and you can find both of those links below the video. The first one is a brand new chatbot that's absolutely free. It works as your AI coach, helping you get to the next steps with a lot of stuff that we're talking about in this video. If you want to really go deeper and get my alerts and all my research and stuff, you can also click that link below too. I'll speak to you soon. So when we get back to this picture here, what you want to have happen on every single swing trade that you put on is you want to say, was it a good trade? Was it a good trade? Was it a good trade? Now, if it was a good trade, now we walk down into the next part of the trade management is what happens after we enter the trade and it starts to move in our favor, right? Now we have the second phantom zone, which is after we enter and it's kind of dancing around right around where we put the trade on, not quite massively profitable, but also not kind of down here below where we entered. Now, this part here is something that is critically important. When you understand that you do not need to accept bigger risk on the initial part of a trade, everything becomes easier. Now, again, I want to give you another quote here for swing trading, okay? You can make really good money, provided you follow the rules and you take your losses and whatnot, where you start most of your swing trade positions off with much less initial position size with the planned intention to add to those trades. So you can actually see here that we have a second part of the process, which is when to add shares. So now the most exciting part about this is that, again, go back to what I said 30 years ago when I was really just kind of getting myself going in the industry. Just give me a system and I'll follow it. That was really the big thing. So I'm giving you the step-by-step. So we have entry, we have stop loss, and did the trade follow through, yes or no? That's going to give you immediate feedback on whether or not your swing trade ideas are good. Good swing trades follow through much quicker. And because they follow through much quicker, you're actually doing a better job of building that argument. If you can think of all the pros, all the cons, why would I take this trade? Why would I not take this trade? And that gets all the way back down to position sizing. The more ideas that you like for the idea means that you have increased conviction, and now you're letting the odds play itself out. But I want to be clear, and I want to show you something, and I want to be super, super clear about this, okay? What I'm about to show you, results are not necessarily typical, so I want to be clear about that, okay? This is a member of our community, our Stock Trading Pro community. And again, if you want to find out what we do, you want to trade with me for a while, click that link in the description. What I'm about to show you is what's possible without necessarily trading big position size, and what happens when you understand trade management as I'm showing it to you right now. So you can actually see here, this is a text message that I received from Guy, and I want to walk you through exactly what he's saying here. Again, this is not typical. Guy is a really hard worker. He follows the system to the letter. Wanted to thank you as I achieved a weekly personal best between open and close positions of $31,000 for the week. Spread across a dozen or so trades, not one started with more than 400 shares, some with much less than that. I want to be clear about this, and this is probably the biggest thing that I want to get across to you. That's not typical. Guy he works really, really hard. He asks a ton of questions in the community, and he's following the process to the letter. But the main point that I want to get across to you here, regardless of your account size, okay, is once you have a plan and you understand that the core of that plan, the core of that swing trading method, business plan, whatever language you're comfortable with, should start out with understanding, what does my position size look like when I start the trade, and what do I plan to do after I put on that swing trade? So if we kind of go back to this right here, the edge share part of the trade is what is the most important part, because what we are essentially doing, if you think about this, is when we put on the trade and we have initial entry on that position, is we're saying, okay, on the start of the trade, I want to have as little risk or exposure as possible, but because I like the swing trade, I want to start it. Therefore, I'm willing to accept the risk. After the trade starts to move, again, which is the trade management part of it, you want to take a screenshot of this. After the trade starts to move, what do I do? We either get positive feedback on the idea and we add to the position at a structured way of doing it. Could be average true range. It could be crossing a moving average. It could be a moving average crossover, whatever you're comfortable with, but it has to be planned and it has to be repeatable. So I want to really kind of bring that home and really talk about what that means. What it means is when we're swing trading, again, for that overnight exposure, we want to make sure that we're not having a big position until it starts to work. The losing trades, the ones that do not work out, have the least amount of shares, the least amount of risk, the least amount of exposure. And the ones that do work out, we have the most. So just think about what's going on. If it doesn't work out, we have the least amount of shares. If it does work out, we have the most amount of shares, and we're continuing to add our way into those positions. Now, you might be saying, well, how often can I add into a position? Well, best case scenario, you have a structured way of doing it, and you are also allowing the profits from the open position to pay for those extra shares. That is absolutely the best case scenario, okay? So let's work our way through the rest of the trade management, because again, once we're in a trade, that's the part that everybody has a little bit of fuzziness about. So once we add shares, we now have a question. We bought down here at our original entry, and our stop loss was all the way down here. Now we're added shares. What do we do with the trade management at this point? Well, at this point now, our goal is to decrease our risk exposure on these positions. So what we do now is we take our stop loss and we move it up to our entry price, and the stop loss on the edge share price is the same price as our previous entry. So if you think about what we're talking about right now, we are basically locking in a flat or break even on the initial risk, and we will now expose ourselves to a small loss back to our entry. So we have entry, edge share price, and the stop loss below that. So we're moving up the stop loss to our original entry. So that's break even, worst case scenario. And we have the edge share price, which is now a stop loss at our original entry. So if you think about what's going on right now, we have locked in, again, assuming no overnight gaps or any of those kinds of things, is normal trade management, where we have now increased the position size of the trade without increasing our risk. Think about that from a mindset perspective of what that means for managing trades. Because most people that are swing trading, that are working a full-time job, again, their heart's pounding out of their chest while the market's fluctuating back and forth. What we are essentially doing is we're trying to eliminate that emotional aspect of trading simply through this system and position management pro is essentially what we're calling it at this point, right? So what happens now after you put the trade on and you add shares? Well, now we have to get to a point where we are talking about profits. Now, I want to be clear. There's a lot of debate out there about risk reward and do you set risk reward? The way that we do things is we have the original risk on a trade, and then from the trade, we are saying, is it likely that this trade can earn 3 times what I'm risking on this to start the trade? So I want to be clear about this. When you look at this here, you see that we have an initial profit target. That word initial is incredibly, incredibly important. So we have the entry and the stop loss, and the distance between those two is the risk. So what we look to do as we build the argument, again, within the power pyramid that I just showed you, when we build that argument, we're saying, okay, that's the risk on the trade. What is the likelihood of us earning at least 3 times in order to accept that risk on this position? Then if we hit that initial profit target of 3 to 1 on our swing trades, how do we maximize our profits on that? Well, we already know that we have planned places to add shares to a winning trade. Now we're going to talk about what happens after we hit the initial profit target. So we have the entry, the add share price, and now we hit the initial profit target, right? And just to give you an example of like what this actually looks like, I'm actually going to pull up a chart. Let me pull up this guy right here. Let's go to let's use Micron. Micron's been kind of flying up all over the place. We're going to actually pull up Micron, and we're going to go into FinViz. If you don't use FinViz, I can tell you again, I have no affiliation with them or TradingView or anything I'm about to show you. I'm actually going to show you how I have it in my software. But TradingView is probably one of the easiest and best charting platforms out there just for pure charting. I actually trade on TradeStation, but I do all my charting on TradingView. But I do some of my scans on FinViz. I'll put these links below in the video. So what I want you to walk through now is thinking about how much is the volatility of the stock and where would that lead to when I'd be adding to a position if it does indeed work out. Some people play stop losses using an average true range. Some people use stop losses on their swing trades based on technical patterns. I typically use a technical pattern as a stop loss, and I'll typically use some sort of average true range metric. You could use what it does normally on a weekly candle, or you could do what it does from an average true range on the daily candlesticks. I'm going to show you actually how to find that right now. So if we go into FinViz and we pull up Micron, stock symbol is MU. We're going to zoom in a little bit. And on the bottom part over here, you can actually see there's some metrics. And over here, you can see average true range, which is 730. So basically what that means, when we're looking at Micron, the way the stock is trading right now, that means on average per day between the high and the low is $7. What was that? $7.30. So essentially what that means is on average, it moves 730 from high to low. So what that is essentially telling us is that's what's known as the volatility of that particular swing trade at this moment. So if we go to another stock, let's say we'll take a look at another popular semiconductor stock. Obviously, we can take a look at either NVIDIA or we can take a look at AMD, right? So we can take a look what they look like here in FinViz. Let's use NVIDIA because most popular, one of the most popular trading stocks out there. You can see the average true range is 492. So what's interesting about that is based on the ATR, the average true range for the swing trading time frame. In this case, Micron is actually more volatile than NVIDIA right now. And that just stands to reason. NVIDIA is actually kind of drifting sideways. If you saw the chart that we were just looking at, it's actually been going sideways for a while and just kind of broke out. So it makes sense that the volatility is a little bit lower, even though it just recently popped and you can actually see it's up again this morning. So what I want to walk you through is if we go back into Micron, and again, remember what we're doing here is we're kind of mapping out the trade part here, which is the add share price and the initial profit target. Let's just say, for argument's sake, we're doing something pretty simple. And let's say that we're looking for a breakout here in NVIDIA, just coming off, in Micron, just coming off of this little bit of a movement, right? The stock rallied, had earnings, pulled back for a few days, reported good earnings, a little bit of profit taking, and the stock paused. Now, What I just showed you is one of the most important things. And a big question that we get all the time is, how do I know when to buy, right? What is the best place for me to buy so I could maximize reward and have a likely achievement of that initial profit target? In other words, how do I set up the best risk reward on my swing trades? I'm going to walk you through that right now. So what we have is something that's called the optimal entry. And I'm going to walk you kind of how to reverse engineer it. You probably have heard the trading indicator known as overbought or oversold. And I know a lot of people use that, but for me, I always found that overbought and oversold told me that something was at an extreme, but not necessarily actionable. So in other words, if you don't know what overbought or oversold means from a stock trading or a swing trading perspective, well, I could really use it on any time frame. It basically means that it went really far in one direction and it's likely to slow down and maybe even reverse. Now that sounds good, but that's not actionable to get into a trade. So what I want to walk you through, and I want you to write this down, is it's something called average true move. Average true move is essentially, if you could visualize when a stock rallies, how much does it normally rally? And the word average in there is very important. So if we kind of pull up, let's pull up Micron again. You can actually see that and let's put the 50 period moving average in there because we want to know what happens during bullish moves, right? So you can actually see this move right here. From this breakout, let's say this move 100 to where it paused over here, about 115, and another pause 115 to 128, so roughly $30. Now, this was a big news cycle, so that was a little bit different. But if we go from this move right here to here, that's a little bit bigger. So what we're essentially saying right now is the average move, the average true move of what that individual stock does is roughly around $15 to $17, somewhere in that window. So now the average true move is how we reverse engineer what the optimal entry is. So I want you to think about these two things. If we find order flow for an idea, if we find a really good idea in that power pyramid like I showed you, how do we know when to buy? Well, if we know what the stock normally does when it rallies and we want to set up the best risk reward, we need to know if I'm about to hit that buy button, how much of what it normally does in a swing trade has already happened. So I'm going to give you a visual and you can take a snapshot of this. This is what the average true move translates into an optimal entry. So if you could visualize a stock pushing up and pausing, and if the average true move is $15, then we have an optimal entry because most of what it normally does is still there. If you pull up a stock, it might be happen to being in a news and it's already gone $8 of what it normally does. That means that we have less profit potential on that trade. Thereby, the risk reward is going to be tougher based on what the stock normally does. Now, the most exciting part about this is we're never guessing what the stock does. Every single stock has a different average true move. Every single stock has a different volatility, average true range, as we just showed you. So you just have to pull up the chart. It's not complicated. You can do it over coffee when you work in your full-time job. You're like, okay, I'm looking to buy this stock. What has it rallied over the 50 period moving average over the last 3 or 4 times for me to get the average of what it normally does? And if I'm about to buy it, how much of that is left, right? I just showed you that. So if we go back into the Micron chart, we're actually going to deep dive a little bit into the trade management part of it. Let's just say, for argument's sake, that we know now the average true range of the stock. If we go back over here, we know that it's $7 if we pull up FinViz, right? So if we go, Micron, if we go back into the Micron stock chart, we know that it's roughly $7. In this case, $7.32, right? So if we enter on a breakout of this candle, which was roughly 61.79, let's just keep the math simple and say $7, right? Just so we can keep it simple. So if we say it's 61, that means that at 168, we are going to be looking to add to this position, assuming that we're using a 1 average true range as a spot to add. So now from the risk reward on this position, we also know that the stock normally moves roughly $15. So what we're going to do now is we're going to put in what is the $15 move from our entry. And if our entry is 161, that means it's roughly 176. Somewhere up in this area would be our initial profit target. Now, from the profit target, we also have to put in our stop loss. So we want to make sure that we have the complete trade managed from start to finish which should be below the candle of the breakout, right? So basically down in this area over here. So once we have the stop loss, the edge share price, the entry price, now we're basically saying, okay, now we know exactly where we're going to enter. We know what our stop loss is, and we know where we're going to add to the position. And we also know where our initial profit target is. Now, here's the part of trading that I think that a lot of people can really amplify the results that they get in the manner with which I just talked about with position management, which is adding, and you saw how Guy is doing it, right? We have the initial target, and everybody comes back and says, why would I get out there, right? That's great. 3 to 1, that's what we planned for, right? No, we never want to guess where it's going to stop. And this chart of Micron is actually validating that. It went much further than that. So what we now need to do when we're looking at, let's pull that the graphic up here again. What we now need to do is after we hit our initial profit target, which again was just what we were looking to do to start the trade, we were justifying putting the swing trade on in the first place. We now need to have a process in place for maximizing profits, for making as much as we can from the winners. And the process that we use is called the profit maximizer. Now, you could use Fibonacci levels, you could use moving averages, you could move dual moving average crossovers, you could use the previous candle. So in other words, it rallies up and pulls back, and I'll show you what that actually looks like over here. Let's kind of minimize this. You could actually, let's say it's rallying, right? I'm going to pull up another one. This was our target, and now it's moving past our target. So now you want to give the stock a chance to continue. I can't say this strongly enough. When you're swing trading and you're capturing some of these moves because you did the right work, you put in the power pyramid, you found the optimal entry, you mapped the whole thing out, you're thinking right? All things that are lining up. You don't want to guess when it's going to end. Let the market pay you. If the stock market is going to pay you, let it pay you. But never guess where it's going to stop. If your stock wants to keep paying you, let it go, but have a process for saying, okay, it's slowed down. And like I said, you could use a moving average. If it crosses down, let's say the 5 crosses below the 20, something along those lines. I'm going to show you the easiest one that is simple to set up before the stock market opens. So you can go to your job, not worry about your swing trade, which is simply using the previous day's low as your trailing stop loss on that profitable trade. So if we could take a look, here's the profit target, and it went beyond that. Right now, if it goes beyond that, we have the next day, we're going to actually move up our trailing stop loss from our, as we're moving it up. Again, remember I showed you before. Let me just pull that up again. I want to be super clear about that. Remember that we added the shares and we moved up our trailing stop. We moved up our stop loss, and we're continuing to do that as the trade moves in our favor. What we are going to do now is when the next day closes, we move up our trailing stop just below the previous day's low. You never want to put it exactly there. Then you go to work. The next day unfolds, we have another good day. We move it up again. We're kind of locking in our profits, which now, again, we're maximizing them because the stock is still proving it's not done yet, and we want to lock in more. Next day opens, we move it higher, opens up here, pulls back, and we're taken out of the position. So I want you to take a screenshot of this because it's incredibly, incredibly important. This is what we might call and I hate to use the word secret, but it is kind of the secret sauce that everybody's looking for. Again, you have your full-time job. You need some sort of structure. You need some sort of system. You need to think about it correctly. Again, there are going to be losing trades even in the best system. But as long as you flawlessly get out of those trades, you're okay with them. Mentally, you think about, okay, it's great. I'm running a business. That's a business expense to pay that loss. Now I want to learn how to maximize what I can make when I do all of that work, building the power pyramid and putting those trades on. Which kind of brings us to the final part that I want to make sure we talk about, which is finding ideas. So generally speaking, when I'm looking for new ideas, I'm using FinViz. And when I'm mapping everything out in FinViz, I'm pretty much spending time over here. If you go to maps and you pull it up, I'm mostly looking at what's going on over the last month and the last quarter. So what I'm really looking for is I'm looking for pockets of opportunity, at least over a 4-week or a 90-day period, to tell me something is obvious. So if I'm now banging down the door on, okay, there's a lot of institutional attention on that particular area of the market, then what I'm doing is I'm saying, well, smart money, deep pockets, somebody who has a lot more teams of research and billions of dollars at some fund is putting their attention on that particular idea, then I'm going to start to pay. So what I'm going to do is I want to be clear about this. I am not looking to predict what's going to happen next. I am simply shadowing what's already happening from those deep pockets. And again, don't get too lost up in who's doing it and all those kinds of things. call it Mr. Market like Benjamin Graham did. It doesn't make a difference. The stock market has many participants. We're looking to swing trade the stock market, and all we're looking to do is to find some place that's already happening, and then we're looking for an optimal entry. So I'm going to pull up the optimal entry screen again so you can take a snapshot of that. Just take a quick snapshot of that. I'll make it a little bit bigger so it's cleaner. So once we have an area that we're looking, then we go to look for the optimal entry. So it's power pyramid. I'm going to pull up the power pyramid for you again as well so I'm going to walk you through exactly how we're setting this up. So the power pyramid is what's going on in the big picture of the market. So we're trying to figure out what's going on between the S&P 500, the NASDAQ, and the Dow. We're looking to see, is there confluence? Are they all doing the same thing, which actually, as of filming this right now, they're all really close to new all-time highs. As a matter of fact, the S&P hit new all-time highs yesterday. Then we go up to the sectors. So again, we're trying to stack the odds. So the sectors are these bigger boxes. You can see technology, financial, consumer cyclical, and all of these boxes are pockets of opportunity. So even just looking at this really quickly right now, where has there been institutional attention over the last month? Well, most of the green boxes and the brighter green boxes are technology, and you can see that. So I'm going to start to focus there. And what's popping up a little bit more recently is utilities and healthcare. So now we already have the market, all three indices, the NASDAQ, the S&P, and the Dow are rallying super strong right now as of this recording. Now we just kind of narrow that down a little bit more to sector. So we want one layer up the pyramid, which basically means now we're looking at technology, we're looking at healthcare, and we're looking at utilities. So again, you have a full-time job. How long did that take? That literally just took us 5 seconds, right? So now we go another layer up in the power pyramid. Let me pull that up again so you can take a screenshot of that. Now we're going to look at what industry groups within those sectors are the strongest. And then from there, we look for optimal entries in stocks that are part of what we just narrowed down. So let's just say, for argument's sake, now the biggest thing we want to say is where are the most green boxes within a sector, within a group? So you can see this big box here is technology. This box over here is semiconductors. And obviously NVIDIA, AMD, Micron, Intel, they've all been in the news recently. So we would then go into those industry groups and we would say, how many stocks within that industry group have that order flow? And order flow is just a fancy way of saying, where do institutions have their attention for our swing trades? So once we have that process down, so we have the market, the sector, the stock, the market, the sector, the industry group. Now we go to the charts like I just showed you in Micron, and we start to find ideas that are what we would call at or near an optimal entry. The optimal entry is basically reversing the average true move. Again, keep this simple. Watch this multiple times. Take notes. Leave comments below. I'd love to hear from you. Have any follow-up questions? And you say, okay, based on these stocks that meet those stages, again, what did that just take? 5 minutes? Which of these are near an optimal entry? Then from the optimal entry, we then map out the trade from start to finish right here. So we have an optimal entry. We put in the risk based on, again, either average true range or it could be a technical pattern. We let the trade unfold. We either get stopped out on the trade or the trade moves up to our edge share price. If it moves up to our edge share price, we then move our stop loss up. We look for our initial profit target. If we hit our initial profit target, then we shift over to profit maximizer. Now, I want to answer one question that comes up often, and I want to say this comes up a lot, which is that's great. We just did all this scenario, right? And you built all these things out and you're walking through what we call power pyramid. You're walking through sector rotation. You're diving it down into the industry groups before we even put on a swing trade, right? The question we get all the time is, how do we know it's going to continue? That's great, right? At that moment in time, how do we know it's going to continue? Nobody knows. That's the whole point. If you're asking the question, how do we know it's going to continue? You are stuck in the prediction part of your career, the prediction part of your education as a trader. We don't predict. I want to be super clear about this. All we are doing is we are putting all the pieces of the stock market mosaic together at the moment in time that we found an optimal entry, and then we are managing it. You saw on the trade management optimization, there are losing trades. We have no idea which ones are going to follow through, but the better job we do of setting the expectation for follow through, the higher the likelihood that it's going to. But if it doesn't, we're fine with that. That's a part of the plan as well. Our job is to find great ideas, manage the downside, and then look to put on some positions when they start to move in our favor. We add to them. Okay, so I want to be clear. If you're going to comment about, say, how do we know it's going to continue? Nobody knows it's going to continue. Now, here's where we kind of flip it on its head. We are not looking to guess where it's going to end, but we have a process in place to know if it's changed. There's a very big difference between is it still valid and how do I know versus trying to guess, is it going to end? So that's the process from start to finish. I'd love to keep this conversation going. If you're swing trading, you have a full-time job and you're looking for that consistency, and if you have any follow-up questions, you can actually leave a comment below. I'll be more than happy to. There's a couple of links below the video as well. If you'd like to join me, come and trade with me for a few months and whatnot, you can find out about that as well. And there's actually something below there where there's an AI bot that can help you with some of these processes and help get your mind right for understanding what it means. So either way, I'd love to hear from you. I'd love to see you. Click those links below, and I hope to see you soon. Thanks so much for joining me here today.